Let's start financial management class 1. Okay, with MCQs. At the end, we have 20 MCQs of this session. We'll be discussing all that. Okay, so let's begin. Financial management, as I said, as per our banking exam, credit management is in the point of view of the bank or the credit manager, whereas financial management is in the view of the business or the consumer's point of view. For us, corporates, bigger organizations are also our consumers. So why we require to read about financial management? So it will help us making a decision when we are in the shoes of our customers. Clear? Let's go ahead. Yes, scope and objectives of financial management. Theory may complicate you. Once I start MCQs, it will cover all your ideas, but it is also necessary to understand basic theory. So it is extensively covered as a financial management of corporates or customer point of view. What should be the financial decision they take in order to stay afloat or in order to stay profitable throughout their business lifespan. Clear? So financial management is concerned with efficient acquisition. Acquisition means financing and allocation of funds with an objective of making profit for owners. In other words, focus of financial management is to address three major financial decisions, that is investment, financing, and dividend decisions. Investment means where they should use their excess fund to generate profit, whether they should invest in mutual fund or they should invest in other company shares, or they should park their money in banks to earn some profit. Then financing, where they will take the loan. Financing means here bank will finance them. So how they will arrange fund for their business use. Then dividend decisions. Dividend means how they will share their profit. Clear? Is it clear? Yes, please mute all. Yes, only I will be speaking. In case any doubt, please put in the chat. While deciding how much to take from each source, the entrepreneur would keep in mind the cost of capital for each source. See, what happens? There are so many avenues, so many resources, so many sources where we can arrange fund for our business purpose. But if that source is costly, then we cannot generate profit, because we are arranging fund from a costly source. We have to repay them interest in a higher interest rate. So that will erode our profitability, that will erase whatever profit we are going to make in future. So like interest, dividend, whatever payment we will make, it will be costly. So we have to take a decision or a wise decision where to arrange money. So where the three main decisions, where the financial management is concerned: where to get the money from, where to invest the money, how much to distribute among shareholders and keep them satisfied, and how much profit we will retain every year. So all these decisions the financial manager needs to take for their business. Where the money come from, whether he will take a loan from bank, it is cheaper than NBFCs. If you will go for NBFCs, they have to pay 12-15% interest rate to the NBFC, but if they don't generate enough profit, then they cannot satisfy or they cannot repay their loan dues. So that will hamper their business prospects in future. Where they should invest money, shares are risky, should they invest in shares? They should go mutual fund, less riskier. They should invest in fixed assets or bonds, they should buy bonds. These are decisions this financial manager needs to take effectively. Clear? Meaning of financial management is that a managerial activity which is concerned with planning and controlling the firm's financial resources. In other words, it is concerned with acquiring, financing, and managing the assets. So financial management has two main objectives: procurement of funds, that means arranging the funds, and an effective use of the fund, where that fund will be used. See, business is a separate entity. Like a private limited company, it has its name, etc., or a public limited company, it is separate than the owner. Okay, the owner is separate entity. He is a human entity, whereas the business is an artificial entity or a legal entity, right? So this legal entity, when it takes birth or when the business starts to commence, when the business starts, it has no money. Where they will arrange money from? First is the owner's own capital. Okay, whatever capital the owner will infuse into the business. So effectively, that company or that business borrows money from its promoters. Clear? So that is promoters equity. When it has started, when this business came into existence, it has no money with him. Where he got money, where that business got money from? That business or that entity got money from its promoters. And what are the other sources where he can arrange money? He can arrange money from bank or by financing. So procurement of fund or arranging fund or buying funds. Why it is said procurement of funds? Funds are not come free. Never you arrange funds in your life free. Nobody gives you money in your life for free. They charge you something. So like if owner, the promoter gives certain equity to start a business, in return he expects a dividend from that business, a profit, share in profit from that business. So it's called procurement of fund. If you arrange it from bank, you are also paying them. If you are arranging 1 lakh from a bank, you are paying them 1,20,000. So that is also buying the fund or arranging the fund. And then when you arranged 1 lakh, you are paying 1.2 lakhs. So where should you invest your 1.2 lakhs so that you can generate that 1.1 lakh and you generate profit of 1,30,000, so that 20,000 can be given as interest and rest 10,000 can be your profit, and out of profit you will give the dividend to the owner or to the shareholders, rest you will retain. So that is the use of what we say procurement of funds. What is procuring funds? It is arranging the fund. Since funds can be obtained from different sources, therefore their procurement is always considered a complex problem in business concerns. We are talking today in very financial language. Why we are talking in financial language? Because question maker will ask at a pro level, right? So that's why we are using procuring funds. We could have said resources of funds. We are using all the chartered accountant language in a simplified manner so that you will have no issue in future understanding these concepts. So effectively it is said procuring funds. So it's a complex process because there are interest rates concerned, there are so many ratio analysis, so many things the bank will analyze or the financial institution will analyze before giving you fund. Clear? So in a global competitive scenario, resources mobilization has to be undertaken through innovative ways on financial products which may meet the needs of investors and help the modern business to grow faster. For example, trading in carbon credits is turning out to be another source of funding. So nowadays it's a new phenomena which is called carbon credits or trading in carbon credits. What is carbon credit? Why we're using it? Because it's a new thing. Maybe this question will be asked here. You can see the image here. Like nowadays, carbon footprint matters. The climate change actions like the Paris Accord is there. The agreement says that every country needs to reduce their carbon emission. Clear? So there are certain organizations or certain factories that emit higher carbon dioxide. So there is a regulatory framework by the government that someone cannot emit more than the required amount of carbon dioxide to the environment. Okay, so if they do so, they have to they will be penalized. So in order to prevent that penalty, what these factories do, that these business do, they buy carbon credits. There are organizations who create or who emit more oxygen than they emit CO2. Like a company or like a business, they are invested in creating jungles or creating forests. Okay, so they they suck the CO2 and they emit the oxygen. So they have enough carbon credit. So that carbon credit, they will create a certificate. In this acre of land, we have done our vegetation, or we have done the forest, we have created a forest. So we have excess carbon credit with us. So if you are running out of carbon credit, then you buy carbon credit from us. Why? To skip the penalty from the regulators. So now that company or that factory which emits more carbon dioxide pays a certain sum of money to the company or to the business or to the forest owner, to those who are emitting less carbon dioxide and creating more or emitting more oxygen. Okay, and now the carbon offset credit, offset means balancing, carbon offset credits are credited to the greenhouse emitter or the one who emits more carbon dioxide. So this kind of trading could be a source of financing too, right? वेरी गुड, कॉन्सेप्ट को जानबूझकर इजी रखा गया है ताकि कोई कंफ्यूज ना हो. चलिए, ओके ओके ओके, लेट्स गो अहेड. फोकस ऑफ फाइनेंशियल मैनेजमेंट इज मेनली, मैं अपना वीडियो ऑफ कर देता हूं, शायद मेरा क्वेश्चन ब्लॉक हो रहा है वीडियो की वजह से. यस, फोकस ऑफ फाइनेंशियल मैनेजमेंट इज मेनली कंसर्न्ड विद द डिसीजंस रिलेटेड टू फाइनेंसिंग, इन्वेस्टिंग, डिविडेंड, ऑल ऑफ द अबव. Your answers please. Yes, very good, very good, very good. Everyone is great. It's D. These are very simple things, but understanding in the financial management language is required to answer the MCQs. Yeah, letter of credit. Which of the following is not one of the major routes for raising funds from foreign sources? FDI, FII, Global Depository Receipt, Indian Depository Receipts. Yes, all of these three are, first three are international source of fund. Which of the following is an example of an angel investor? Individual investors who are often successful businessmen, professionally managed public or private firm, a professional person who invests in building companies by providing them capital to help them grow and expand. None of the above. Yes, A is the right answer. Why some of you are confused with C, I don't understand. Okay, these are angel investors. Shark Tank India, yaad kar lo. The planning process used to determine, what is the planning process used to determine whether a firm's long-term investments such as new machinery, replacement machinery, new plants, new products and research development projects would provide the desired return or not? Profitability, capital budgeting, financing, or none of the above? Namrata Sur saying capital budgeting. So I will go with ma'am and all others are saying B. Great. In which phase the general problems related to funds analysis, planning and control were given more attention? Traditional phase, transitional phase, modern phase, none of the above? In transitional phase, just before the modern phase. Currently we are in modern phase. Last question, which of the following is a short-term finance function? Decisions: dividend decision, working capital management, selection of asset, acquiring optimum finance. I don't need to answer it, I believe, because all of you are right. It is working capital management. Saurabh saying I have some questions. Thank you, Saurabh. It's the fast, very fast session. So I tried my best to make it as simple, as effective as possible. Thank you all once again. Okay, thank you.